And there we go. We got the thumbs up from Facebook. Everyone, hello and welcome to another fantastic episode of Dream Chasers Interviews with the Future. Hi, Grandma. My name is Adam Carswell. I'm joined today by Richard Wilson, Richard C. Wilson, the founder of the Family Office Club. Really, for multiple reasons, looking forward to today's interview. I remember probably, and we were chatting a little bit in the green room before we hit record here, but Richard, I remember probably about like 3 or 4 years ago, I'll have to look through my outbound emails. I reached out to you and I was like, man, I love everything that you're talking about. I'm not quite at that level yet with my family, but I know like when I get to a level where I can start putting together a family office, you're going to be the first guy I reach out to, and have just seen your name continuously pop up everywhere since then. And that's one thing I definitely want to talk about here today too, is kind of, people that know you look at you as like the founder of the Family Office Club, but they forget that you're also probably one of the best marketers in our sector by far, like cream of the crop. So for multiple reasons, looking forward to today's interview and kind of picking your brain. And I just want to say thank you for taking the time to come on our show and talk a little bit about what you're working on. So before we dive in, any thoughts or comments on what I've said so far?
Yeah, I mean, I think that what people don't realize is that I'm not a number cruncher financial modeler. I'm someone who's studied positioning and marketing and how to get in front of a niche audience, and just happened to select for the last 14 years to get in front of the ultra wealthy family office crowd. And as a byproduct of that, I've learned how to set up over 100 family offices, and we've written 14 books, and we've hosted 150 live events. And as almost an accident of that strong positioning, we now have great deal flow and a great network in the family office space. And most people come to this industry as like a financial analyst or financial modeler or a CPA or a risk consultant. And I come from it a different perspective, and that's kind of unusual, but I think that's a good thing. So for those of you who are trying to aspire to do something and you're like, oh, I think I need a Harvard degree to do that, or I think I need to do this, I don't think I'll fit in. It could be a really strong thing for you to not fit in and be like everybody else that's in that industry,
Yeah. I just had I have to share this now too, because if I don't, I'll probably forget it. You had a moment. So you were our first guest speaker over at Raise Masters, the number one mastermind for elite capital raisers. If anyone wants to know more what I'm talking about, you can go to raisemasters.com. But Richard was speaking. And I know we can get some numbers here too, but I want to say over the course of 2020, ladies and gentlemen, this guy raised about $250 million in the middle of a pandemic, which is pretty impressive. So to have him come and speak was one thing, but someone in our group kind of, I want to say, asked a question that was, they knew it was a tough question, and they threw an acronym in there. And Richard, like, it was just I don't even think he realized what he said, but he was like, dude, he's like, dude, basically he's like, dude, I own commercialrealestate.com and I literally don't know what you're talking about. And I messaged Hunter after you spoke, and I was like, dude, that was so funny. He was like, I know. So anyways, I had to get that out there. And then also for some of our listeners, I remember, as I mentioned, probably about 3 or 4 years ago when I first heard you speak, I wasn't even, it's crazy to say, but I wasn't even aware of what a family office is. And I'm sure we have some listeners right now that are wondering what a family office is. So could you kind of just fundamentally explain what is a family office?
Yeah, sure. And most people don't know what one is, even if they're ultra wealthy themselves, they don't know what one is. And essentially, family office is a solution to manage your whole balance sheet and your wealth as an ultra wealthy person. And to really understand what it means at a granular level, you have to know that there's 3 types of family offices. There's a very lean virtual family office where maybe you have a half-time employee or 1 full-time employee, and everything else is outsourced. And it's typically for 5 to 10 million net worth, up to a $100 or $200 million net worth families have those. For those who are worth 25, 30 million or more, you might have what's called a single family office, which means a dedicated team just for you and your family. And a single family office could be managing $5-10 billion or just 30 to 50 million plus. And then there's a multifamily office, which is really a wealth management firm that caters to the ultra wealthy. And they might have 50 clients or 200 clients. They're not built just to serve you, but you get to leverage this infrastructure and this broader team that can kind of, cross-pollinate best practices across clients. So those are the 3 main types that maybe help people understand, how it might apply to them.
And in some ways it is kind of, silent money or silent wealth. I think the other factor here is a lot of people who get into the world of working with and dealing with accredited investors. You think that there's this small pool of individuals around the world that you can work with. And I know, again, myself here over the past few years, beginning to see more and more like, wow, there are so many different pockets of wealth and wealthy people that you can work with, investors, et cetera, that again, most people aren't aware of. So, how many family offices are in the world?
Yeah, so we know that there's over 60,000 people globally who are worth $100 million or more that we know of, and those are individuals, not families. So if a brother or sister are worth 50 million each, they wouldn't make that list. And then there's over 250,000 to 300,000 people worth $30 million or more. The thing is, a lot of people that are ultra wealthy and have 10 to 30 million plus, they don't even know what a family office is yet. Even if they live in the United States, a lot of people don't know what it means. So the industry is very early on. A decade from now, it'll be double the size. So some people think there's 15 to 20,000 formalized family offices around the world. But the truth is that a lot of groups act like a family office. They just don't call it that. It's just a holding company, or they have the same structure. They don't know the term. And others may say they're a family office, and it's a little bit of a marketing facade to get into events or to try to, get special access to other family offices. So there's some confusion around use of the term, and nobody knows how big the market is. But you're right that no matter where you live, within a city or two away from you or in your own city, there are a lot of ultra wealthy families, but many of them are quiet and somewhat private. But one thing to remember is that somebody at one of our conferences didn't know what a family office was and learned what it was. They went through some of our family office club member directories, et cetera, and they were able to land an $8 million check and a $40 million check for their real estate development projects. And a $40 million check replaces 400 investors at $100,000 a piece. And people kind of forget that, and they say, oh, they didn't respond, or they're hard to work with, or they want different terms. But if you just get one of those, it might replace 400 others. So it's worth taking the time to develop that relationship, even if it takes 1 to 2, 3, or even, God forbid, 5 years to make it a productive relationship. It could totally be worth it and double the size of your business overnight.
Yeah. And you just reminded me of and so at ASIM Capital, we are more focused on the smaller, I guess you could say, accredited investors. But one thing that I've heard Hunter say to our members before is, whether you want to go the family office direction, smaller mom and pop accredited investors, whatever direction you want to go, just remember, deals are still done on the golf course, or, hypothetically speaking, right? Like, it's not like if you start working with an institution or a family office, all of a sudden the way of making business happen changes. Fundamentally, there's a lot of similarities.
Right. Yeah, for sure. I think that anytime you're raising capital, it's about relationship building. Unless you're raising $1,000 or $5,000 at a time for some crowdfunding campaign, people generally want to get to know you, trust the opportunity as well as you. And I find that deals close the fastest when somebody is local to you, so you can build the relationship easily, or they're local to the deal, or they're local to the industry, meaning they know the industry already, they made their money in that industry, or everybody has used self-storage. To get someone to invest in a data center, unless they're from that space, it's not going to be very familiar to them, and it's going to be a harder sell. But I do know many people who have jumped up, and like one group, so I've got a billionaire client that backs sponsors through a co-GP kind of JV program. And one sponsor, for example, had 300 million in assets under management. We signed a co-GP agreement with them just about 3.5 months ago. And so far, after 4 years getting to 300 million of assets, they're now at 700 million in assets after just about 3 months. And in another group they met at our Super Summit in 2019, they only had 30 million of assets under management. And they got a co-GP structure done with my client through our event, and they've now grown to 130 million in assets, and they're going through $100 million asset sale right now, and be able to achieve a good IRR. So many times, I think it's good to be doing both things, going the private investor channel, but also trying to develop those JV, co-GP, big family office relationships at the same time, because they take a lot longer to close.
Yeah, you hit on a powerful point there, and it's going to kind of transition me here to the conference you've got coming up. But essentially, it's the power of collaboration. You're always one relationship away from exponentially growing your business, or just changing from where you're at to where you could go. I don't know. You just outlined, the growth that can happen in a short period of time based on structuring relationships and deals a certain way. So the one you just referenced, I think you said took place. The first connection took place at your conference. So could you tell us about the conference you got coming up, and then also maybe just some of the other magic that you've seen happen at these events?
Yeah, sure. So I run the Family Office Club, and I've been doing that for 14 years. And our website is familyoffices.com. And we do about 16 to 25 live events per year. Some workshops on how to raise capital and how to work with investors or structure deals, and then some are investor summits, usually 6 to 7 investor summits per year. And our next one is our largest. It's a 650 person conference in Fort Lauderdale on December 13th. We're going to have 57 speakers on stage in one day. And there's going to be 2 billionaires on stage, 4 heads of publicly traded companies, a shark from Shark Tank, who we just closed our second investment deal with last Friday.
I think I saw, did you have Uncle G speak there last year?
Yeah, he's spoken at our events like 3 times so far. He usually confirms last minute. So I was just emailing him back and forth like a couple of days ago. And he's like, hey, you don't need more speakers. You have 57 of them. And I was like, yeah, and you don't need to speak at conferences where nobody else wants to speak. So come speak again, So I'm trying to hard close him. I don't know if he's available or not.
I'm going to put, because we're live on Facebook right now. He had a really good speech on the power of social media and raising money last year that I saw that. I'm gonna drop that here. But sorry, continue about the conference.
Cool. Yeah, no, he was great. And so it's just a one-day event. We have welcome cocktails on the Sunday the 12th, but the 13th on Monday, December 13th in Fort Lauderdale, and we're going to have 600 people at the event and 57 speakers on stage in one day. So it's going to be awesome. We're going to have tons of investors and family offices on stage. So the idea is just to make a lot of connections. And important to know is that we don't pay anyone to speak on our stage, meaning like we don't get some famous Army general or pay a bunch of Harvard professors or theorists or some famous book author to speak on stage, or having Michael Jordan come up and speak. We just have investors who want to get deals done. And that's how our investor club really operates. And so you had asked about, if anyone wants to learn more about that, it's just familyoffices.com/super. And we just got a $99, trial membership. And in a decade, nobody has matched our guarantee that if you don't like the event for any reason, we'll just refund all your money, because we know you're going to love it. So last time out of 840 people, we had 1 person refund. So I doubt you're going to be unhappy. But in terms of other things that have happened, me selfishly, I use my own events to build relationships with investors. So I have my best investor leads coming to the event and speaking on stage at the event. And we set up meetings between the people who attend, and we read over their bios, and we match those up with our top investors who are attending. And we'll have 75 to 100 one-on-one meetings occurring during the live event.
Wow.
So that more deals get done rather than just people randomly connecting. But we also ask every investor on stage, and I script all of the discussion panel questions for all 9 panels, because I don't want to get bored going to my own event, because I've done 150 of these now. But I ask every investor on stage exactly, what are you investing in right now? What are you looking for? How can someone in the audience bring you a deal that meets exactly the real estate terms or operating business terms that you're looking for? And that's how we encourage deals to get done. So I know that after the Super Summit in 2018, somebody landed a $30 million seed capital investment for their hedge fund, for example. And I know that many operating business deals and real estate deals have come together, or even partnerships for a new sponsor, independent sponsor company or something have come together through these types of events. So we're all about making connections and planting seeds, building relationships to help business go forward.
I love it. And again, one thing that stands out to me so strongly about what you're doing, and again, I think the naked eye won't catch it, but you're continuously honing your skills as a marketer and a connector. I think those are, fundamentally a communicator as well. What's going to drive any entrepreneur to just continue to scale? You got any any hacks? We'll say one is a connector and one is a marketer that you feel like you once you figured it out, you're like, okay, this is what I got to keep doing.
Oh yeah, for sure. I could talk all day on this, and literally we have 10 workshops where all I do in each of these unique workshops is talk for 5.5 hours really quickly, just downloading all the strategies we use. And so that is something that I'm passionate about. So let me try to narrow it down to think what's most critical.
Mhm.
One is I don't like doing anything that hundreds of other people are doing. I think it's pretty much worthless and a waste of time. So you need to always play a different game than what other people are playing. Also, you need to look at any market you may enter and think to yourself, what's the most valuable segment of that market? And if you want to compete against a big guerrilla competitor, then maybe just identify a niche area that's the fastest growing or most profitable, or that you are the most well equipped to do well in, and then position yourself to serve just that. Like, we're not just an investor club or a family office club, just an investor club for family offices. And we bought familyoffices.com to position ourselves. We bought commercialrealestate.com last year at a 1.6 million valuation. We bought billionaires.com last month, and we're interviewing 30 billionaires and putting their thoughts into a book. And so figuring out that niche position is really important and critical. And you want to have it so that when people read the name of your company or business or investment firm, they not only know what you do, but hopefully why they should want to work with you as well. A lot of people have a company called Wilson Capital or WIC Incorporated, and no one knows what you do at all. And so you always need to, if you can, from the beginning, have a brand that sucks people in and it's sweating for you, and then have a single one-liner that also, in just one concise sentence, can explain what you do and why someone should take your call, reply to your email, take a meeting with you, etc. So those are some really basic things that almost everyone is missing in the investment industry, and many businesses are missing. And if anyone here is trying to start out and decide whether to go one direction or another, I found it helpful to look at like the Jim Collins hedgehog strategies filter of kind of what's your DNA and background that gives you a natural advantage, what can make you a lot of money, and then what are you super passionate about, and only do things that you're really passionate about, could make you a lot of money, and you have a natural advantage because of your DNA. And then if you layer on top of that what has growing demand and is inevitably going to be worth more in the future, and what is not too crowded by competitors, and you only do things that meet all 5 of those criteria, and those last 2 are ones I just apply myself, it's not from Jim Collins, then that's how I make decisions on what to move forward with. And then I just say no to everything that doesn't meet those 5 criteria. And it helps us be synergistic. We only say yes to things that are synergistic with what we've already built. And then also they have to meet those 5 criteria to be seriously considered.
Thank you. Bombs, guys. I hope you're taking notes. If not, go back. One thing you mentioned there, and I've heard this a part of your strategy before, never got a chance to ask you though. You have authored, I think, like dozens of books, right?
Right.
How do you go about doing that? I'm looking into writing my first book right now. Continue to just meet so many entrepreneurs that want to do it, don't know how to get started. I know there's a few different processes, but you can get a lot out of, for example, I don't know if ghostwriting is the right term, but hiring someone to help you get it out there. What does that process look like for you, and how are you able to accomplish it so effectively?
Yeah, so we've written 13 books in the last 14 years, and I'm working on our next couple right now. I've interviewed Brian Tracy on this, who's written 73 books, and he said that the length of the book doesn't matter a lot. It's about the value of the book. And if you can get the value across in more concise fashion, more people will actually read every word of the book versus missing half your message. So you don't need to make it more painful for you and your readers by writing, a 300-page book. Most books could be done in 75 to 125 pages. If you need to add more, you can link to a video or a webinar, and that could be a good way to actually get a lead from the book and know who they are and get their email address and phone number and ask them something that gets them engaged with you. So that's something I've learned the hard way. The title of the book matters almost the most. You want to position it so that your ideal prospect picks up the book. And one example of that is a book we wrote recently called Centimillionaires, or Centimillionaire Strategies. A centimillionaire is a 100 million plus net worth family. There had never been a book written before. on centimillionaires or for centimillionaires. And we bought centimillionaires.com. We wrote the first book on it, and we just gave away 6 strategies that apply to every centimillionaire. Another example is a book called How to Start a Family Office. If you want to start one, you probably have a lot of money, and there's no other book available on that topic. So we wrote that and get leads in through that. And the one we're working on right now is the billionaire research book. It's going to be called Billionaire Strategies, 100 insights from 30 winners in the game of capitalism. And we're just getting email-based interviews done with billionaires and getting their top answers to 3 questions that I wrote, kind of like a Tools of Titans type book, but a little bit more concise because these people are the busiest people on planet Earth. So that'd be my recommendation. And in terms of the process, I've done it every way, the painful way, the trying to write a little bit every day, the writing every Friday, the trying to knock it out in a month way. One book I wrote on a red-eye flight on an airplane with several cups of coffee, and just kind of wrote it one night and then edited it and got it done. That is one way to do it. The best way I found, though, is to think about the topic, get the title really dialed in, so it's exactly attracting a really well-qualified prospect, and then form a speech that you would do. And you could do it over a webinar. You could give the speech at a conference or virtual event. But if you come up with 12 slides for your talk, and each slide just has an image, and you might tell a little story or an insight or a best practice or a mistake to avoid on each slide, then each slide could be a chapter of the book. And once you give that talk 4 to 5 times, then that 5th time you give it, it'll be refined. You might change the order of the slides a bit, and then it'll get better as you go. And so on that 5th time, if you record it, then upload that recording to rev.com.
Yep.
They'll transcribe it the same day for $1 a minute. And then you can take that transcription and drop it into chapters of your Word document for your book. And then you can go and publish that through like KDP and get it on Amazon, et cetera. And we work with a couple book editors on Upwork.com to make sure that the writing is kind of smoothed out, or grammar mistakes found, et cetera. So that would be one of my suggestions for getting it done without it being too painful or expensive, really.
Yeah, and you've been at this for 14 years. So as you continue to grow and to scale, another massive part of the success is the team. And there's another Richard Wilson nugget that I've had happen in my life, and you didn't even know about probably until now. But Hunter said he was talking to you, and basically he was like, "Man, your assistant is really dialed in. How did you find her? Like, everyone's looking for a good EA or a VA." And again, I think very nonchalantly, I pay him 6 figures a year. They get the job done. It's like, there's levels to this game. So tell us a little bit about building out your team. Kind of, where was the team 14 years ago? What does it look like now? How do you find your talent? I mean, these are things that people really struggle with.
Yeah, for sure. It's definitely critical. Anyone who takes a company public or is really successful gives a lot of credit to the team, because it's so critical and central. So I have 2 executive assistants. I have one that is local to me, and they help with dry cleaning, lead gen research for me or a client. They go and drive around, take pictures of real estate if I need that, or help prepare for a meeting, or print things out for me, or regulatory paperwork, or do a little bit of property management work for some assets we have. And then I have a second executive assistant who's been with me longer, and has a decade of experience managing not only real estate, but also being an EA. And so she knows everything that needs to happen in our investment side of our business, and kind of does everything else that can't be done locally with that first EA. So we have 20 people on the team total. And one time I met someone who was in Texas. He was 82 years old or so, and he had a business that was doing 25 million in revenue and 5 million a year in profit. And he did no advertising, no marketing, no PR, and he had no sales team. And I said, how did you build such an amazing business? And he said, "Oh, I just found the best people possible, and then I paid them a little bit more than anyone else would pay them, and they never left me. So I've had the same team for 25 years, basically." And what I see is a big mistake with a lot of EAs and salespeople, et cetera, is lack of transparency and accountability, which I can get into in a second, but also they look at it like a cost and not an investment. And getting an excellent EA is an investment in yourself. It's not just an investment in them. It's that if you get a bad EA, they're going to fumble everything, mess everything up. You have to retrain them 5 times. You have to fire them and hire 3 other people who will leave to get paid more somewhere else or not take the job super seriously. And you can expect a lot more from people if you pay them well. And if you're very clear about the expectations, and you can be more demanding on someone versus like, oh, okay, well, we're not only paying them this much, et cetera. So what do you expect? So we expect people to be excellent, otherwise we replace them. And I think keeping people up to a standard of excellence and making sure that they know if you're going to survive on this team, then we move quickly and we're resourceful and proactive, and we're always getting a lot of things done every day. And to ensure that happens, we have a number of KPIs and things that we track. Like, in fact, just here when I was talking to you, there is like this KPI log that came up on Slack, and every day we look at the number of phone calls each member of our team made the day before, and it's marked as either green, yellow, or red, and whether they're in the zone of how many phone calls they need to be doing. But also we see their call time, and they have a call time KPI as well. Every morning, everyone on the team on Slack reports their start of day report, their SOD report, and says what 3 to 7 goals are going to get done that are tangible and measurable for that day. And that's like their goals for themselves for the day, but they post that to everybody in the team. So everybody knows what everybody's working on. And at the end of the day, they self-report what they finished. And it could be something completely different than what they planned because something important came up. But then everyone on the team knows what people were trying to do, what they did get done. And when I'm traveling, I can just glance at Slack and know what everybody's working on. And if some client started with us or said they had a big deadline that changed or some deal is closing, I can rearrange somebody's schedule to fit what the company needs or have team members talk to each other. And then we also use HubSpot to keep our marketing organized, and we use HubStaff, which is a different software, to record the screens of all of our employees. It takes random screenshots of their work, and it's kind of like a clocking in, clocking out system, which we've used for a decade now. It was even more helpful when we went virtual. And that's pretty helpful, because then if there's a real problem with a salesperson, we can look and be like, oh, well, we saw you were away from your computer 5 out of 8 hours of the day, and we saw you only did 2 phone calls all day. So what's going on? And they might be like, oh, actually, I was sick today. I just didn't want to tell you because I was out of sick days. But we're basically paying them not to work in that case or something, right? So, or we'll see someone, shopping on eBay when their sales are down and other KPIs aren't lining up, and it makes you can access their Gmail account and see they didn't send any emails, and they look at Vonage and say they didn't make any phone calls. And you look at HubStaff and say you weren't even on your computer, and when you were on Facebook and eBay. It's like you're fired, right? So otherwise, it's not a fun thing to fire people. And if it's all based on, oh, I don't feel like there's a lot of productivity, or why is it taking so long to get this stuff done? You can look at some hard numbers and be like, okay, maybe it's questionable, or, oh, this is black and white. They're taking the job for granted. We need to get them off the team, So I know that was a long answer to your question, but I think that type of stuff took me a long time to learn.
Yeah. Hiring, firing, tracking KPIs. You said you guys use Slack as well. That's interesting. I know more and more teams are starting to use it. And so if you're getting ready to build out a team, that seems to be for me like the gold standard right now as well, which is just organizing everything through Slack. There's a lot of automations. You mentioned HubSpot too, where you just connect everything. So yeah, no, thank you for the for the long-winded answer. I feel like I had some more on that, but it's slipping my mind right now. One thing that did come to mind for me though was I think you mentioned you guys have a team of 20. We have, likely some listeners right now who might be interested in pursuing a future with the Family Office Club. So are you guys hiring? Do you have internship positions or any roles that need to be filled right now? What does that look like?
Yeah, we do need to hire somebody for our event management side of the business, specifically someone who's had experience booking investors to speak online at conferences. We have one excellent person on our team who leads the team, but we need another person full-time to be helping us with that. So if anyone has experience in booking investors or speakers for conferences, and they have an investment finance background or a speaker recruitment background, that's a role that we're looking to hire for, short term. We're also looking to add an investment professional to the family office club who would be someone who has a background in either raising capital or syndicating deals or private banking background. And we really only hire people, like I said before, they're kind of proactive, high energy, positive. And then in general, we're usually adding a new kind of client service sales professional to the team every 3 to 4 months or so. So if somebody has that type of background, they like talking to people on the phone and engaging over email and via live chat on websites and closing sales, et cetera, then we're typically always keeping our eye out for an excellent salesperson, just because some need will come up over the next quarter or so in that area as well.
What would be the best way if any of those hit some heartstrings just now for them to reach out and inquire?
Sure. Just at richard@familyoffices.com would be best. And just send over a link to maybe your LinkedIn profile and maybe your resume and what position you think you'd be a great fit for, or what position you're looking for. And we're always happy to keep people in mind in case they could go work for one of our clients or something like that. We're always happy to keep people in mind and be helpful. A lot of people are interconnected in this industry. And a lot of people at the top who run podcasts or run family offices or billion-dollar real estate sponsors, et cetera, they all know each other. And so what we've found is that if someone looks like a true professional, is a really, takes themselves seriously and takes other people's time seriously, et cetera, we always try to be helpful to them, because eventually it's going to come around and there'll be some opportunity. Like one of our clients was worth around $1 billion. We were trying to close a deal recently, and they reached out to the attorney on the opposing party to get this $300 million JV term sheet signed. And the attorney used to work at that person's company. So even though they represented the other party, they had a great experience working for them. And so the lawyer recommended that we all work together to get the deal done, and it got done very quickly and easily because of that. So I think that those types of things come around, and there's a lot of karma in the investment industry long term. If you stick around for 7 to 12 years, then things start to come full circle,
Yeah. And as you mentioned, you've been at this for 14 years. So within those first 5 years, maybe even less than 5 years, as you mentioned, especially then, hardly anyone knew what a family office was, or at least it seemed that way. What was it like for you in the early days when you had those moments was there ever moments where you kind of question, you're like, man, should I keep doing this? You obviously had the breakthroughs, but what was that like in the early days?
Yeah, for sure. There's a couple like funny moments. Maybe you've seen Pursuit of Happiness, where he goes out on the street and he looks up and he realizes he finally made it, and he had worked so hard to do it. I've had like a couple of moments like that. One was when I started the business, it was just a blog, and it was on hedge funds, capital raising, and family offices. And it was at like richard-wilson.blogspot.com or something. It was just a free blog, and I got 500 hits a day, 1,000 hits a day, et cetera, and went up and got my speaking invitations. But because it was so much on hedge funds, capital raising, and family offices, people knew me as the hedge fund blogger, because it was hedgefundblogger.com is what redirected people to the blog. And I realized that I could position myself however I wanted to, and I don't want to be known as the hedge fund blogger guy. So I said, well, I think family offices, people with a lot of money will always be in favor. Hedge funds may come in and out of favor. So I'm going to position around the family office niche. And I think that capital raising was of second interest, and then hedge fund details, the third interest level. But I remember at the beginning, when I had no employees, no office, almost no revenue. We had just started out. All we had was advertising on the blog, really, when I quit my job raising capital. And I remember sitting in a burrito shop, a Boloco burrito shop in Boston in Harvard Square. And we had launched from our hedge fund blog a hedge fund certification program. And we had no books we had written, just a study guide and books that other people had written, and just told people if they want to, they can enroll in our hedge fund certification program, and that we were limiting it to 80 people or something like that at the time. And I remember refreshing my PayPal, and after I launched it, and it was like 5,000, 15,000, 20,000. And that one day we brought in $35,000. And I remember sitting there in my sweatpants in the burrito shop being like, oh, maybe there's something here, right? So, and also I almost didn't start the business. I had started it, but I almost left to go take a job just 3 to 4 months into it, I got an offer at a great capital raising firm. The founder I really respected, he raised $1 billion a year, and he would groom me and teach me, et cetera. But he was offering 60,000 a year base plus commissions on the upside. And at that point, my blog was starting to bring in that much money, just working on it part-time. And I remember one of my friends told me at the time, like, hey, Richard, you have something here. You don't have a big house payment. You don't have 3 kids and a wife yet to worry about. You should just go for it. And worst case, you take that job next year. He'll hire you in 6 months if this doesn't work out. So, and then along the way, there's been a lot of offers to buy Family Office Club, and 1 or 2 from credible firms that made us stop and think like, hey, do we want to do this? But many people value us, though, the traditional way, a multiple of EBITDA, and just like a respectable kind of 4 times EBITDA or 6 times EBITDA, whatever, which is fair enough. But since our business is so strategic, we always turn that down because we're always gaining equity stakes in companies by joining their advisory board. Or like last Friday, we got our second deal done with one of the sharks from Shark Tank. And whenever we get a deal done for them, we get a piece of the equity we got for them and a piece of the royalties we got for them. And we're always growing new platforms out of Family Office Club. And so in my mind, we're building a real platform company for the long term. And that's one of our strategic advantages, is that, I'm 39 years old now, and I started this, when I was 25, and I was just a kid basically. But I'm still a kid.
Many would probably still say you're still a kid.
Yeah, exactly. So I think that by the time I get to 55 years old, and everyone like you and I are the CEOs and presidents of all the $1 billion plus organizations out there, that's really when all of this is going to come to real fruition, because maybe a lot of our followers are, my age or 5 or 7 years older than me, because they're on LinkedIn and they're on Facebook, et cetera. And I think there'll be a changing of the guard in 5 or 10 years that's going to be exponentially more worthwhile than selling out early. So definitely been some times along the way where it just seemed like the first 3-4 years without a team is definitely very challenging, just working 12-14 hours a day, trying to figure out how to run a business and how to hire, and lots of employee frustrations and stuff like that everyone faces, right?
Yeah. So cool. One thing you just mentioned that really stands out to me, I'm starting to see this more and more, but negotiating equity or percentages or whatever it may be, sounds like you've had experience, in multiple deals. What would be any recommendations that you would make to someone when it does come down to negotiating your stake in a deal or whatever it may be?
Yeah, so there's many sides to this. We've done 10 deals now that were gross revenue royalty deals, and I really like doing those when it comes to operating businesses. And these can be advantageous depending on what side you're on. If you are raising capital, you could potentially protect some of your equity by giving people a royalty and giving them less equity, or giving them some equity that goes away after a certain royalty threshold is met. And we've really evolved our legal documents and our structures around that, and developed some kind of proprietary structures around royalty deals. So if anyone listening is raising capital for a business that is doing 500,000 or $1 million plus in revenue, and you don't want to give away all your equity and get diluted, there's ways to do that. And we've learned a lot about doing that. If you are on the other side of it and you're looking to be a really savvy investor, and you don't want your money stuck illiquid in an operating business for a decade, hoping they sell one day, then one way to look at this would be to, when someone's asking you to invest for, say, 5% equity, and they want you to put in $100,000, you might be able to say, okay, but I want to get a 2% gross revenue royalty until I get 100% of my money back. And then your equity can stay at that level, or maybe it goes from 5% down to 4%, because now all your money's off the table, and then you can recycle that into the next deal. And so one thing I think people don't realize, and it took me about a decade to realize this, is that the structure of the deal matters more than the strategy. Like, if you give me a mediocre deal, I can make it excellent if you allow me to structure it the way I want to. But if you show me an excellent deal, but it's structured so you have all the risk, get none of the income, you get out of the deal last, you have all the liability, you have to sign personal guarantees on the debt. I mean, there's 10 ways to make it a horrible deal, even if it looks excellent at the strategy level or the potential IRR level. So the structure really matters a lot. The membership classes, the rights to the profits or distributions or royalties, the optionality to remove a partner or buy out a partner. Everything could look great, but if you have the right to be bought out at 1.5 times what you bought in for, and the company goes up 10 times, then they might just buy you out at the 1.5 times return and keep all those profits, right? So the trick is to do something in balance for both parties. And then I think just in general, investors don't realize probably how much negotiation power they have to custom structure things and renegotiate terms. A lot of high net worth investors just don't see a lot of deal flow and they just go in on however the terms are baked. But for a larger investor, they can often renegotiate those terms and come up with their way of investing that makes the most sense for their priorities.
Yeah. So did we just uncover the 15th book, Structure Over Strategy?
Yeah, you might have. I mean, it's something I'm kind of obsessed about lately. So as we learn more, that could be something. We've done a webinar and a full day workshop for 5 hours on structures. Okay. And if anyone's listening here, I'm happy just to send you the webinar for free. Or if you become a charter member in the Family Office Club, there's a 5-hour workshop just on structures, like a 5-hour version of what I just said in 2 minutes that goes into way more detail and case studies and ways to structure things to bring in investors faster. And it relates to real estate as well as operating businesses. Any type of deal could be structured better or worse. And then any deal you do could be structured to be tax efficient, or you can just do the deal and not worry about the tax impact and pay more taxes. But that's another thing that we've been kind of dialing in with deals that we do, is to try to make everything more tax efficient for investors.
Yeah. Awesome. And you've mentioned a lot of resources here today. So what is the best way, or do you have any other URLs that we can send our listeners to, like that? You got the workshops, the books, the conference coming up, which I do have the link to that. I just want to make sure everyone's getting what they want, because there's a lot of good stuff here.
Sure. I'll go through a few quickly because they relate to different types of people who may be listening. If you want to come in person in Fort Lauderdale with 600 other people to the Super Summit, would love to have you there. It's a $99 trial membership to come. And then it's either $2,400 a year or $399 a month membership that's just month to month. That's at familyoffices.com/super. And if you come and you came through Adam and this podcast, please come up and introduce yourself and say hi. And we're happy to be, extra helpful to you. And you can email me before the event just to let me know what you're up to and what deals you're working on, et cetera, what your company is. We have a free book on capital raising at capitalraising.com. And it takes like an hour to read, and it teaches you how to position yourself in front of investors and not reach out to investors, but have investors reach out to you more consistently. If you need help with your materials, we have an investor relations marketing agency at pitchdex.com, and we give away free resources at pitchdex.com that could be super helpful for those of you that are trying to raise more capital and need to improve your pitch deck along the way.
And then I got to endorse that real quick too. That was Richard came and spoke to our group on pitch decks, and that's something that we refer to for all of our members over and over. So awesome. Thank you. Yeah, continue.
Cool. No, I definitely appreciate that. And the last thing I'd mention is just that if you are an investor, our events, and you're just a private investor or a family office and you're not raising capital or syndicating anything, or you don't have a fund or anything like that, you can go to investorclub.com. And then if you register there, you can come to our events for free as a private investor. And if you need help formalizing your family office or anything, we can always help you with that as well. But investorclub.com is just for passive private investors, really. But yeah, our whole business model has been just to give away a lot of value before asking anyone to pay anything, and just making it kind of de-risk for people to get involved, because many people say, oh yeah, I've been wondering about it for a while, and now I finally came and I love it. So I wish I would have came 2 or 3 years ago. And we hear that most often. And so we just try to de-risk everything. Like at a Super Summit, I think we're paying $170 a head for catering, but it's $99 trial to come, and we guarantee you'll love it or your money back. And still people are like, oh, I don't know. Do I want to hear from 57 investors in a day? I don't know. Maybe this is a trick or something. And I'm like, we're basically paying you to come. Like, here's some free food, great experience. And if you don't love it, let us know. So the name of the game is just building trust in this whole industry, right? So it's just adding value first is how you do that in my experience. And, I think many businesses could, just like ours, be always trying to get better at adding value first, right? So.
That's awesome. That's another thing where I think, myself and a lot of our listeners could learn a lot is if you if you did a workshop on, basically putting together an event where the plan is that you'll lose money. Obviously, the benefit is beyond that, but a lot of people get into the event business because, oh, we're going to make all this money. If you come in with the mindset like, hey, we're going to lose money, there is an art to making that successful. So there you go.
Right, right. I mean, Dan Kennedy is someone I've learned a lot from,
Oh,
and
nice.
Jay Abraham as well. And Jay Abraham is someone that we're working with his family office on. And basically, he talks about self-liquidating legion. And basically, it means that if you can make an event business profitable, which we have on new members, we'll lose money on the new member to win them over. And then the monthly recurring revenue kicks in and we'll break even or make money after 3 to 6 months on that. But we have past members who are paying their monthly dues. We have about 1,000 members in the family office club, and then we have sponsors to the conferences, et cetera. But the mistake people make when they see our business is think that we're a conference business. But like you said, it's like when you have the conference and the relationships, and you source deal flow, you source investors, you get new strategies all the time that you can use or clients can use. And then you take all those byproducts and you make some soup over here. And that's like the real business. But what people see is the conference business. And Dan Kennedy always says that if your business is like an octopus, no one will know exactly how you really make your money or where you make your money. And it's very hard to copy your business because you're a little bit vertically integrated and you have kind of this platform approach. So that's been our mentality since the beginning. And be helpful. If anyone has questions on that, feel free to shoot me an email. I'm happy to give you some feedback over email on applying that to your business.
Yeah, that's awesome. And great reference to another great marketer there, Dan Kennedy. There's another top-notch marketer, sales guy. I'm going to ask you to kind of do the quote here for me because I might mess it up. But I remember you said Jeffrey, I think it was Jeffrey Gitomer, said something along the lines of, when it comes to email list building, if you send one per week for 3 years, if you send one per week for 5 years, there's like certain levels that you'll get to if you just keep that consistency going. What was that quote again? You know what I'm talking about?
Yeah, so this idea changed my whole life. First of all, he told me, I'll give you my most valuable insight across 10 best-selling books. Here it is in a sentence or two. And I'll give it away, even though my competitors could read this and compete against me, but I know they won't because it takes too much hard work. And he basically said that it could be via email, social media, speaking in person, going to association events, whatever, getting in a magazine consistently. But he said that if you get in front of people who could say yes to you, and you do that just once a week, then in 1 or 2 years, you'll be a local expert. And in 3 to 4 years, you'll be a regional expert. And in 4 to 7 years, you'll be a global expert. And I heard him tell me in the book that nobody really follows that because it takes too much hard work. And I literally said to myself, well, I'm the son of a bitch who's going to do it. And I went up to him at a conference like 5 years later, and I shook it. I stayed till everybody left, and he was picking up stuff around the room with his team. And I went up and shook his hand, and I told him, like, you've changed my life just on you saying that. And that's all I've done now. And it's totally changed everything in my life. And so he's had me on his podcast. It's Jeffrey Gitomer is his name. I've been on his podcast once or twice. He's been on my podcast and been super helpful. And so you have to first know what niche you want to go after and what keyword term you're going to own. Like, we want to own how to start a family office. And we search that on Google, or 7 out of the top 10 Google search results. Same with the word centimillionaire. And if you want to own a niche sandbox, whatever your turf is, you have to be so confident and high conviction in it that you'll do anything it takes to dominate that niche sandbox, whether it's self-storage in San Diego or stem cell companies in Texas or whatever the niche is. And if you don't have the attitude that, hey, even if this takes 7, 10, or 12 or 15 years, it is worth the journey, because if I can ever dominate this sandbox and be a top 3 or the number 1, a lot of good things are going to happen. And if you don't have that conviction, then none of this is going to work, because you won't do any of the hard work, and you won't have the passion to do it. You won't have the vision to do it. You're going to give up too early or right before you get the results. And the people who are like, oh, I don't have time to write a book. It's like, okay, well, you probably just don't have like the right niche. I'm a really bad writer. I've just had the work ethic and the focus to do it. If you find the right niche, you'll be motivated to do it as well. And so making sure you've got the right focus first, and then being super consistent, is an important part of the equation. Otherwise, just randomly chasing 5 things at once that are not synergistic or not focused or not high value enough is just going to feel like a waste of time, because it is.
Yeah. And every the last 10 minutes has been fire as well. Um, so quick question, 2021 coming to an end now. Do you have a rough estimate of how much capital you guys have raised at the Family Office Club this year?
Yeah, we have a couple different metrics we look at. We have like wealth management clients we bring in, JV term sheets that we sign with a publicly traded company that signs these JV term sheets with real estate sponsors. They basically are looking for sponsors that have 8% cash on cash in their properties, as well as a 17% IRR in US-based commercial real estate properties. Then we provide 97.5% of the equity on the deals. They just provide 2.5% equity. And we allocate $300 million worth of equity to acquire $1 billion worth of projects. And as long as the underwriting lines up on the individual projects, after we have that JV term sheet in place, then we can put that capital out to work and buy $1 billion of real estate with them over 3 to 5 years. So this year we've signed $900 million worth of those JV term sheets, and we've done about $25 million of smaller investment deals here and there, like the Shark Tank deal, a cannabis deal, a couple operating business deals, real estate deals, etc. And then we have one wealth management client that we're in the process of closing right now for about $60 million. Someone who is from the commercial real estate industry and just needs a virtual family office, like a single family office solution. And we closed a wealth management client earlier this year that was smaller, around the $10 million net worth size. So our goal is to always be doing 100 million plus in deals overall, but it comes in different shapes and sizes. And this whole co-GP program is really something that's taking off for us. So we're hoping to sign, $2 billion of JV term sheets in 2022 is one of our big goals. So if anyone listening wants to apply for that program or learn more about it, they can shoot me an email. We're happy to share the details on that.
Awesome. And that's what I was going for. I'm like, I'm just waiting to see the highest dollar amount he throws out there, because that's the price we're going to put on this interview. So ladies and gentlemen, thank you for listening to this $2 billion interview with Richard C. Wilson, founder of the Family Office Club. Richard, thank you so much for investing your most valuable resource with us here today, your time. Our viewers and listeners, you guys as well, thank you. We've had so many moments and sentences and words of wisdom here today, but you got any parting words of wisdom for us here now?
I think the last thing I'd say is that when people ask me what's the most important thing when raising capital, or what is the most important thing as a family office or an ultra wealthy investor, my answer is always the same. It's integrity, not in the sense of just moral integrity. That's like one of 20 different types of integrity, but integrity in terms of integration of everything. So the clothes you wear, where you live, who you talk to, what you listen to on Audible, who your friends are, what magazines you read, what food you eat, do you exercise or not, do you take 5 shots of whiskey every night? All those things need to be aligned with who you are and where you're going, and then there's less friction. If you're a family office and you're trying to invest in fintech, but you're based out in the middle of nowhere in Kentucky, where there's no fintech companies, and you don't have any connect, you don't go to fintech conferences, et cetera, you're going to be misaligned. There'll be friction. So I just see a lot of friction in business models and branding, positioning, actions, and the less friction, the better. So the more integrity, the better, because it just creates more alignment, and people know where you're headed. And then the people who want to join you on that path will join your team and invest with you and be part of that story.
So cool. I think I know throughout the interview, I said that was a book idea. And now I'm going to throw a third one out there, going to go back and listen to it. But 20 Shades of Integrity is the next book coming out here, guys. That's really cool. I've never heard that concept before. So one last time, Richard, thank you so much for hanging out with us here today.
Yeah. Thank you, Adam. Take care.
Yep. All right, guys, we will catch you in the next episode. Remember, in all you think, say, and do, take it to the next level.